Ever wondered what makes a stock good to buy or trade, especially if you are looking at charts instead of companies' earnings reports? In this video, I will show you how to spot strong stock setups using simple technical analysis tools. And don't worry, even if you are a beginner, you will understand it. When expert traders talk about a good stock in technical terms, they are not talking about the company's revenue or management. They are looking for price action that is easy to read. They're looking for a stock that has a clear trend, up or down, easily recognizable chart pattern, high trading volume, especially on important days like high up days or breakout days, a stock that finds support or resistance near key technical levels. It is important to reiterate that we are not looking at companies' profits, we are only analyzing price behavior on the chart. This isn't a long-term investment choice. This is a short-term to mid-term technical opportunity, a good opportunity. First, trend direction. Is the stock moving consistently in one direction? If the stock is above its 50-day moving average and trending upward, it may be a strong candidate. Next, support and resistance. Support is where price tends to bounce. Resistance is where it often stalls. Buying near support in an uptrend is a classic setup. Volume confirms the strength of a move. Look for spikes in volume during breakouts or reversals. It confirms that the move has big investors behind it. Now let's put it all together with a real chart example. We will look for three things. First, we will look for a clear trend. Then we will observe strong support or resistance. We will also look for volume confirmation. Any stock that checks all these criteria is considered a strong stock from a technical trader's point of view. This is the daily chart for Tata Motors, April 10th, 2023. Shares gapped up on strong volume. Strong uptrend during which price remained about 21-day exponential moving average until August 2nd. In this period, prices moved from 450 to 600 plus. Another strong performance by Tata Motors in October 2023. Next example is from the US market. We are looking at the daily chart of NVDA from 2023. Again, strong start to the uptrend in February on strong volume. This is textbook strong stock. Another huge gap up in May. Price remained above 50-day moving average for more than 6 months. Great example. So now you have seen what a strong technical setup looks like in action. Trend, volume, key levels, all lining up. But before we start jumping into charts, let's talk about what not to do. Because even with the right tools, beginners often fall into some classic traps and they can seriously hurt your trades. Let's go over the top 3 mistakes to avoid. Number 1, chasing at the top. Be careful. If the stock has already had a huge run up, you may be chasing at the top. It's no fun catching a winner on its decline. Number 2, ignoring volume. If there is no surge in volume, that move might not be real. Volume is the market's vote of confidence. Number 3, trading in sideways markets. No trend, no edge. This is technical trader's nightmare. Very frustrating. Just remember, no trend, no trade. To recap, follow the trend. Respect support and resistance. Watch the volume and check momentum. Start practicing by looking at charts today. Trade smart, stay sharp. If you found this video helpful, do provide your feedback through comments and be sure to like, subscribe and share. Thank you.